Nvidia, so they're reporting Wednesday after the bell. Look at the year to date on this baby, okay? It's up 118% year to date. Obviously, one of the hottest stocks in the stock market. Now, what everybody's going to be paying attention to for Nvidia is one thing, okay? It's not going to be actually their revenue and EPS. That's all cool. Guidance is going to be important. But there's actually going to be one thing that's overwhelmingly more important than all of that right here. And what it's going to be is what is going on with their AI chips. How many of these are they selling? How fast is business going to ramp? This is why the stock has made a 100% plus move this year. If they had nothing to do with AI chips, believe me, the stock wouldn't have made this 100% plus move. But everybody's extremely excited about this. Why are they extremely excited about this? Because Nvidia, it looks like for Nvidia's AI chips, it looks like Nvidia is going to get between $10,000 and $30,000 per AI chip, okay? And when you talk about these big players in regards to the AI market, I mean, they're going to have to put in orders of thousands, tens of thousands, maybe even hundreds of thousands of these chips. Now, go ahead and run the math on what that is when you're selling these chips for $10,000 to $30,000 each. And Nvidia is going to be able to likely get these sorts of prices for at least the next, I would say, 12 to 36 months before they face more and more competition from AMD and others. And so they've got this like little time period in front of themselves where they're just going to be able to absolutely make a fortune. But the question is, how much money are we really talking? Because that's what's important for the stock price, right? This stock has moved because of this. But what's really going on here, right? And I just took this article because, in the aftermarket, right, some folks are selling some of these chips for $40,000 plus. Absolutely insane. So I think that one's really important to pay attention to. Am I interested in buying Nvidia stock? Not right now. I've owned it in the past. I could own it in the future, but not right now. I'm not interested in buying that stock. You look at a stock like Corsair, like I own, right? Corsair just blew through $20 a share at this point in time. Now, Corsair could take a breather if Best Buy reports really bad numbers, really bad guidance. That could pull Corsair down a little bit here in the short term. But you look at the stock. It's a quiet stock that's climbed over 45% year to date. Over 45 flipping flapjack and percent year to date, right? That's incredible. The Dow Jones Industrial Average is basically flat on the year? Did you know that? The Dow Jones Industrial Average is basically flat. And meanwhile, we've got stocks out there going up 40, 50, 60, 70, 80, 100%, right? That's incredible to think about the divergence in the market right now. But a stock like Corsair, remember, this stock started to get hit way back in early 2021. This stock peaked in February of 2021. It started its down cycle far before all these other stocks started their downward cycles, right? And it's been pulling up very nicely. I mean, remember, this stock bottomed it was kind of around late 2022, right? Stock bottomed at just over $10 a share. Check out its 52-week range, just over $10 a share. Today it's 20, right? And it's not like the numbers have necessarily been great for Corsair. It's just it's getting less and less bad, and it looks like it's going to get better and better as this year ticks on in terms of revenue growth, margin growth, and profitability. And so that's great news for Corsair. Look at Shopify. Shopify looks like it wants a new high. The stock's up 76% year to date, and it doesn't look like it's going to stop anytime soon, okay? This baby looks like it wants a new high. I know from my understanding, Cathie Wood sold out of Shopify. I think, as I said before, I think it was a huge mistake on her part. Huge mistake. This is not a type of stock you want to sell out of, and certainly not over this next 12 to 18 months. And the reason being is in regards to Shopify, they just fundamentally changed their business. And the biggest way I've seen a company fundamentally change their business, we're talking this is bigger than Meta. Getting out of those logistics related businesses and cutting the amount of staff they cut that are all going through right now, the margins and the profitability that you're going to see this company emerge later this year and into 2024 is going to be night and day difference from what you saw over the past year. You can't even put them on the same level. And so when I look at a stock like Shopify, this is a stock I personally own in the Patreon portfolio, right? Which, if you want to see all the moves I'm making in my Patreon portfolio, plus be part of that Discord chat, check out the description area down there. There's a link for that to join us in there. But in regards to this, I don't want to sell Shopify anytime soon. I mean, I love the company for the next 5+ years, but also it's a beautiful story for the next 5 quarters. That reminds me a lot of Palantir in that respect. In terms of Palantir, they got a beautiful next 5 quarters in front of them. They also got a beautiful next 5 years. And those are the ideal situations in the market when you can find a story, because it's hard to find stocks many times that the short term and the long term line up. right? You might have a stock that has a great long-term future, but it doesn't have a very bright short-term future, right? And you might have a company that has a really good short-term going for, but they don't have a really good long-term going for it, right? They have a lot of worries about what's going on long-term. And a stock like Shopify and a stock like Palantir, these stocks have incredible short-term and long-term stories that are going on in regards to them, right? Look at a stock like Fubo. Fubo continues to provide another 5% plus move here today, right? The 1 month, this is a 1 month chart of Fubo. The stock price is up 64 flippin' flapjacking percent in 1 month in regards to Fubo. That's incredible. The momentum does not stop in regards to this stock, right? It's just continue to show momentum. And the Google trends still looking really, really good for Fubo. Still, if you look at this past month where Google Trends has been at versus a previous year at the same time, they're significantly above. So that means their relevancy is obviously significantly above, and they also just went up on prices, and what they said is they're not seeing any major drop-off at all. They're actually seeing a better results in terms of people like canceling and things like that. They're not even seeing like it's better than last year, they even mentioned on the conference call, right? On top of that, they mentioned their advertising business is getting better and better on a month-over-month basis. I mean, you got a lot of things playing out there. It's a high-risk, high-reward stock, but I can understand why the stock's up 64% in 1 month. And, I wouldn't be surprised if the stock's up 600% in a year or two. Like, when you're coming off those sorts of levels and you're a $1 stock, especially now that they don't have to raise money, all the fear is pretty much gone out of Fubo. The cash flow is going to get better and better. The profitability is going to get better and better. The margins are going to get better and better. The revenue growth continues to pour in. They continue to attract more customers, and they don't need to raise any more money, they said now. I mean, what's there to be scared of? Obviously there's always risk with the business model, but I'm just like, they're so well positioned. And their only major competitive threat, really, that we've seen is honestly YouTube TV in regards to that, right? Snowflake. So, okay. This obviously matters, okay? Why does this matter? Well, Snowflake gets grouped in with Palantir. I'm not saying that's right, but it is the way it is, okay? It gets grouped in with Palantir stock for whatever reason, okay? A lot of people have a lot of trouble finding a direct comp for Palantir, so some people like to throw it in the category of Snowflake, which isn't really right in my personal opinion, but some people do it, okay? And so ultimately, a stock like Snowflake could move Palantir positively or negatively, depending upon many various things. No, with Snowflake, their growth is decelerating pretty rapidly. That's still amazing. If they can put up 40% plus growth, that's big for this one, okay? If they don't put up that number, the stock's crashing, because at the end of the day, the stock's completely valued on their net dollar retention and that revenue growth. That's everything for this company right now. Now, what keeps me out of a stock like Snowflake? Why can't I buy this stock? Well, I can't buy this stock because, they've been profitable for a bit now. But, you even look at like next year, for instance, next year's numbers, right? And based upon that, you're paying like a 176 forward PE ratio for next year's numbers. I mean, for a company that's been profitable for a bit, I'm not willing to pay those sorts of prices, okay? I'm just not. And that's kind of where I'm at with Snowflake. And so it doesn't mean you can't make money in this stock. It's just like there's too many other, in my opinion, easy money stocks for this next 12 to 24 to 36 months that I'm looking at and investing in, that I'm like, do I want to take a risk on a Snowflake at 176 P ratio based upon next year's numbers? I'm okay with that, okay? I'm okay. There's much better opportunities, in my opinion, out there in the market, but I will be paying attention to them.